you this evening. Now, the top story today, government has approved a new EV policy to attract global players like Tesla and VinFast and establish India as a manufacturing destination for electric vehicles. Now, under the policy, EV manufacturers with a minimum investment of over 4,000 crore rupees will be allowed limited import of cars at lower customs duty. Now, eligible companies have 3 years to set up manufacturing units in India and must reach 50% domestic value addition by the 5th year. There will be no upper investment limit.
Story today, Paytm's parent company 197 Communications surged in trade today after the National Payments Corporation of India approved its third-party application provider license. This will allow UPI transactions to continue on the Paytm app. Now, sources have told CNBC TV18 escrow accounts for Paytm's online merchants will be handled between Axis and Yes Bank. Meanwhile, escrow accounts for Paytm's offline merchants are going to be handled exclusively by Yes Bank. Remember, RBI's March 15 deadline for Paytm Payment Bank to wind up banking activities ends, and it also mandates that any merchant's bank accounts still linked to Paytm Payment Bank will have to be moved to another bank by today.
On what's brewing today, out-of-hospital geriatric care startup Kite Senior Care has bagged 45 crore rupees in its Series A round led by Ranjan Pai's family office. The total plan outlay for this expansion and growth is actually 65 crore rupees, with the balance of that amount coming from various other sources. This new capital infusion will enable expansion into new markets across southern India and deeper penetration in existing markets. Joining us now to discuss this further is Rajagopal Ji, the co-founder and CEO of Kite Senior Care. Rajagopal, thank you so much for joining us on Startup Street today. The elder care segment is pegged at $20 million and is growing at over 10% annually. So talk to us about what you have on offer for geriatric care and how affordable are you?
Well, thank you so much for this opportunity. As you rightly said, geriatric care market is pretty large and it's over $20 billion valued at this point in time. We basically provide 3 types of out-of-hospital care for elderly, which includes post-hospitalization rehab care, palliative care, and dementia care. As far as the pricing is concerned, I think we have realized that, these expenditures are out of pocket for the children to incur. And therefore, we have realized that it should be very reasonable for them in the pocket. So therefore, our pricing is moderate and people have not had any issues or challenges while we are pricing our products.
All right, so we'll get into that in a little bit of detail, but coming to the fundraise, right? Ranjan Pai's MEMG Family Office Fund has invested in your startup, and this is, again, they'd already invested earlier in your company. So what kind of a role will they play in helping you grow? Will you be using the knowledge that they have to offer as well?
Absolutely, and thank you for asking this. I think it's just been under a year since we raised the pre-Series A money from Dr. Ranjan Pai and team. I should tell you that we have enormously benefited from his knowledge and his kind of contribution to the growth that we have seen. I think the team brings in a lot of value to us. And, Dr. Ranjan Pai is a thought leader in healthcare in India, in Asia also. And the kind of support that we get is pretty enormous from them. And we have also, been able to deliver what we had assured them about a year ago, which is basically growing from 1 city, 70 bedded centers, to 3 cities, 5 facility with 340 beds in a span of 1 year. And I think this journey has been very memorable. And I think we have been constantly encouraged by Dr. Ranjan Pai and team. And that's what we are here right now with the kind of confidence that they have got on us.
Right. So they are helping you grow by those numbers. But what's the fund allocation plan at this point? You currently, like you just mentioned, have about 350 beds. So elaborate on your expansion plans.
Yeah, so I think our business is primarily driven by quality specialized care centers that we are building around in South India at this point in time. Why South India? Basically because the adjacency concept comes in. So what we have done right now is we have entered 2 new markets, which is Hyderabad and Chennai, where we are doing pretty well. And we have established ourselves as sort of a trusted partner in Bangalore already. So the allocation plan is as follows. We are moving from 340 bedded brand to a 1,000 bedded brand in the next 6 quarters. That's the target we have set for ourselves with the kind of confidence that we have got in the past 12 to 24 months kind of a growth. So we are allocated about 70 beds each in Pune, Coimbatore and Cochin as the new markets. And the rest of the count of around 500 to 600 beds are coming from the existing markets.
All right. So 1,000 beds in the next 6 quarters is your aim. Now, some of these funds that you've raised will also go towards your pilot your tech platform, which is Senior Shield. So how is it different from what's already on offer, and how soon will we see the pilot?
Absolutely. I think we are very excited to talk to you about that. Just about a couple of weeks back, we actually launched the tech product called Senior Shield. This is basically a brainchild that we have been cooking for the last 1 year. Just to set the context, I think we have been interacting with a lot of children whose parents have been under our care for the last 4 to 5 years. One of the common theme that came out is, okay, when they get well, how do you make sure that you take care of them on a continuous basis when they are at the residences? Also, we've been managing and providing medical care for a few retirement homes in south of India. So while interacting with active seniors, we realized that, with our knowledge of having interacted with people who have been suffering either short or long-term illness, we wanted to create a scalable platform to provide qualitative healthcare, health monitoring for such seniors, also clubbed with active aging as a concept. So we have brought both together. I would like you to know that we are a provider and we have a huge set of physicians and therapists in our table, and we have brought all of them onto this platform. So the pilot has just got kickstarted, and within a matter of a couple of weeks, we've had about 2 dozen signups on our platform. And we are hopeful that we will complete our pilot in the next 6 months of having about 1,000 signups on the platform.
All right, so next 6 months, you'll finish the pilot of this project. But, we have to talk numbers. So what about revenues? What's profitability looking like? And which offerings are most in demand at this point in time?
Absolutely fine. I think out of the, from our experience over the last 4 to 5 years, we have seen that there has been a tilt towards rehabilitative care, and of course, followed by dementia care. And of course, we have the palliative care coming in. So we see sort of an equal mix, but overweightage to the rehabilitative care. Now, as far as the numbers and profitability is concerned, we believe that this concept of care centers is a neighborhood concept, very similar to some of your maternity chains, etc. So therefore, we believe that 70 to 100 bedded centers in the neighborhood is a very apt size, because considering the fact there would be competition and more players coming into the market. As far as the profitability is concerned, I think the facility-based care is much more profitable. Even with optimal pricing, we are able to see around 30+% of EBITDA at a steady state of 85% occupancy. Home care, as you know, is a market where there's a huge demand, but there are a lot of cost pressures that happen in the home care, and therefore any brand realizing between 15 to 20% is doing very well. So we are a mix of both facility-based and home-based care, and at a corporate level, this business is capable of generating anywhere upwards of 22% of EBITDA.
All right, Rajgopal. Thank you so much for joining us on our show. We're completely out of time. We wish you all the best on this journey.
Thank you so much for this opportunity.